So of course you guys saw the post. Bloomberg did an article over the weekend where the title was Cathie Wood sees 20% returns after unbelievable 2020. And of course, earlier this year we talked about Cathie and how amazing she is. And then a couple of days ago, I posted like, are you guys really geeked over? And of course, Cathie and some of the funds made more than 20%. I'm just reading off the headline, but I was like, you guys are geeked over 15 to 20% return now because it was stated by Cathie, but Apple gave 74% return. And my initial intention was to come on here and just rant my ass off. And that is, I don't think the right thing to do. Ranting, that would be based on ego. So I want to start this off different and ask you, with all the information that we've given. So if you would have invested in Apple 10 years ago or 5 years ago, 10 grand would have turned into 50,953. AMD is up 500%, 600%. But me knowing that these stocks are going to take off is not enough. Let me know what we could have done better that would have induced you to actually invest in these companies if you missed out in March. Please type that in chat. I really want to know. I really want to know. Because as being a part of this movement, it's not enough for me to be like, hey, I knew this was going to happen. And I know some of you are like, hey, you can lead a horse to water but can't make him drink. But if you're on fire and there's a lake nearby, I need to push you in, whether you want to go in or not. So what could we have done to induce you to actually take these companies serious? Because the only path to freedom that we have is actually investing in companies. You can't trade time for money and get there. And second, so I'll go from accountability from me to you. What caused you to not buy? Because this is one of the greatest decades in modern history when it came to investing. So if you look at the most profitable indexes and ETFs of the decade, I want to walk through some. Kudos to Rashad and Azim for posting this over the weekend. But let's just look at a 10-year period of, let's start with Apple, and we'll dance through a couple. So if we go from 2010 through 2020, 10-year, look at this return. Look at this return. We are looking at almost 1,200% return. For Borno Apple, let's look at another one of the top companies of this decade. So let's go down and look at percentage, and let's go 10-year. Amazon is right at 1,700% return over a 10-year period. Let's look at Tesla. I think we all can agree hands down. Kudos to Stock Club members that are still holding. This is why I say buy and hold first and foremost. Look at 10-year. Over a 10-year period, and Tesla was not an easy hold. Talked about a base before, and Tesla stayed within its range. For those of you that were in it for a long time, whenever it got to a high, it dropped off 50% literally from the high. And tonight, once I go through the presentation, there's a key lesson that I need you to know, regardless of what it is you want to invest in, that you need to apply. And if you do, you have a 90% probability of making gains out of the market. But Tesla's up 10,000%, 10,100%. Amazon, 1,600%. Kudos to my guy, Ty. This is one of his favorites. It's been slept on for a long time and not talked about enough. Lululemon. Let's look at a 10-year. Lululemon is up 861%. And let's go to the final one that we've talked about before, NVIDIA. If you didn't invest in these, did you go look at the 5-year and 10-year returns on them? Look how much NVIDIA is up over the last 10 years. And even if we look at 5, the returns are great. Okay, so let's recap the year with some of the top ones, of course, and let's just look at 1 year. So, of course, Apple done absolutely amazing. And let's go 1 year and click percentage. And we can see Apple is almost at 100% return for the year. So 80%. The companies that are great are going to remain great for a long time. Let's look at Microsoft, 42% for Microsoft. Let's look at AMD. So a lot of times, I know you guys thought when I was just saying Microsoft and Apple, that I was giving away picks that had no value, but that's not the case. 1 year, AMD up 126%. And of course, Apple now making their own chips. Microsoft is now making their own chips. AMD, great. NVIDIA, great. That puts the squeeze on Intel. Let's look at NVIDIA one more time. So this is a part, and Troy is going to do an amazing segment about how to do your homework. But 127%, and one that a lot of people slept on, that I gave away this year, that is not talked about enough. If you look at the 10-year, Mercado Libre is up 2,500%, and year-to-date, 200% return. So once again, what could I have done to induce you to make you hold these? And then what could have been done on your end to make sure that you were in the right companies? And that's why it's very important to silence the noise. The Bloomberg article, I'm sure you guys saw it. A guy became a millionaire off of Tesla. And the key point is, we all can do it. Please write this down. This is the biggest lesson of the decade. Biggest lesson of the decade. Regardless of what you believe in, and even if I don't like the stock, this lesson will apply. Hold what you believe in for 10 years. I don't care if it's crypto. I don't care if it's marijuana. Whatever you like as a investment, hold it for a 10-year period. I want us to stop flipping a 10-year period, because if we look at some of the biggest companies, if they are good, they are going to do well over a long period of time. The companies that are not doing well, you can see over time, they end up falling apart. Time definitely reveals all. So if there's a company that you believe in, I need you to hold it for 10 years. And if you're going to do that, put yes in chat. And let me walk you through a portfolio. So I posted this on IG, and I want to show you guys here in more detail. So let's say I take the top tech stocks that I believe in, and I put 10 grand in, and I just equally balance them out. And say we do a 10-year period. And we do Apple, Microsoft, Amazon, Tesla, and we do 25% of each. Look at what the returns are. So they're all broken up. So you would have started with 10 grand. Your final balance would be $365,000. Look at this though. The max drawdown, the max you would have lost was negative 17%. Negative 17. Okay. The worst year would have been 6% doing that. So when you guys are looking for these ETFs on your own and you're hunting, it's like, okay, great. But if you just put four together, you can do pretty damn well on your own. And look at these returns. And now let's even go look over a 5-year period and do the same thing, 2015. And let's analyze. And you can see 5 years, 10,000 would have turned into 103. Now let's play with a little bit more money. And let's say we go from 10,000 and we go to 100,000, what that looks like. And even if you don't have 100, I need to show you so it can stretch your mind and you can see. Now 100 grand would have turned into 1 million. Okay. And then if we go look at 10 years, 100 grand would have been 3.6. And then for those of you that have deeper pockets, let's look at if you have $1 million and you're in just 5 years. So let's start with 10. Keep the theme going. $1 million would have turned to 36 million and over 10 years. And then if you look at a 5-year period, and the best year was 180. 7.65%. So, of course, last week we talked about the market is only down 24 out of 195 days.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.